how is it going? This is Scramble from Emotionless Crypto Trading, and today we're going to talk about something different, but still very good insights, and hopefully it will help you during your trading journey. Now, the topic is how to profit from Bitcoin and altcoin price crash by accumulating more coins, basically. This is the main strategy that we're going to use and share with you today on how to accumulate more coins during a price crash, which when the recovery comes in, it will represent a lot more money into your account. Probably you can double, triple, or even more the value of your account by using the following technique I'm going to share with you in the next minutes. Now, what usually people do during a price crash, they used to move into USDT, or they used to sell out their coins into fiat currency. That's the first thing, and that's the way people used to find refuge and defend their profits. Now, probably that's not the best way, and for sure that's not the best way for the ones which are having the abilities and skill sets of trading actively and knowing how to manage a strategy like this. Now, what you see over here is a normal chart of an uptrend as well as all-time high and then a downtrend. Basically, it's pretty simple. This is the kind of the idea of the way the downtrend structure looks like. This is the idea, basically. We have ups and downs during a downtrend as well. They do not mean a bigger value of the coin. What are we talking about? The ups and the ups and the ups, because we have all these ups, right? With these ups, which actually represent lower highs, but we still have these ups compared to the downs we're having, to the bottoms, right? We still have these ones, which do not really represent more money as the value of the coin, but you can multiply the quantity of the coins you're having with the following strategy I'm going to share with you. So definitely that's very important. When the market is gonna recover, you will be able to make a lot more money just by holding those coins in your wallet and not trading actively anymore if you would like so. But I'm still, even on a uptrend, I'm still suggesting people to trade actively, whether we're talking about uptrend or downtrend, because that's the way you maximize the time and the potential of the market, but also the potential of the specific coins you're running with. That's what it is around the trading. So let's get over the strategy. This is trading.com, guys, the website where I'm running market analysis. We're looking at the Ethereum compared to Tether. That's not really important. What's important right now is the downtrend structure, which I'm talking about, and the way you have to implement this strategy. I was telling you, there are ups and downs. The downtrend looks something like this, right? It always has lower highs. You see how these highs are lower and lower, basically. This is the way it looks like. Now let's discuss clearly on this perfect example which I'm taking with Ethereum compared to Tether USD. Right over there we have the all-time high. From there, basically, we are able to see that the first parabolic movement comes down the way, and you have the ability right over here to see the first signal of a market crash. Therefore, you could have exit. That's why I'm pointing over here the sell button. So you sell your Ethereum positions. And it's obvious that before this movement, we had quite a lot of volatility around the same prices. And as well, even before that over here, we had huge increase without too much selling pressure. Now that kind of huge increases without selling pressure will kind of cause usually a powerful selling pressure and the market to crash down the way. Exactly what happened afterwards. So you had a signals. Where I'm representing here is you had the ability to sell out, right? So we consider you sold out over here and you bought back right here in the bottom. Now I've tried to make this buying positions quite realistic, not right here in really extreme bottoms, and not trying to sell basically always in the extreme tops. I'm trying to make them as realistic as possible by the way they could have been read from the market analysis and data language you received from doing market analysis at that specific time, right? So right here we've got an entry which goes up the way with the selling point over here. Right here we have another entry basically with a selling point over here. Another entry with a selling point in the high. another entry, selling point in the high, another entry over here without a selling point in the high for this case, because we're not achieving exactly what we were expecting. Therefore, we were needing to use our stop loss feature and sell out in minus for now. Right over here, it happens once again to sell out our trade in minus. But for the next time, it goes better. Buy in, sell out higher. Buying in the low, sell out higher. Basically, this is kind of a basic strategy, which is also represented over here. It's kind of simple. You always buy in the lows and sell in the highs. That's something that everyone knows. Now, I'm sure that many of you are afraid of doing this strategy because you don't see these bottoms and you don't see these highs. Now, let's take a look at what we have over here. It's pretty much clear as long as you know how to run market analysis. It's kind of clear when we are approaching bottoms. Usually in the bottoms we have these long shadows which are representing rejection of the market, right? Rejection of the prices that the market was trying to push forward. The selling pressure was trying to push forward. It wasn't able to do it. We were recovering because the buying pressure was more powerful and more strong. Therefore, it creates usually a shadow on, it's not on top of the candlestick right now, it's below the candlestick, right? That's what we're talking about, a bottom which looks like this. But also usually a bottom comes after a powerful selling pressure, which looks something like this, right? Something like this. It's not moving down the way like this, which is not powerful, right? It's completely different. The speed and the angle over here is a lot more comfortable and steady instead of comparing this one, which is parabolic down the way. Now, usually after a movement like this, we're having the market coming back and fighting back at some point where you will be able to see that and you will be able to entry as quickly as you see the buying pressure increasing more and more, but also by running market analysis that represents clear data and signals of an entry at certain point of times. You can buy back after you see the confirmation and ride it forward. This is basically the way it looks like. We need this movement which do not really represent too much buying pressure. It has only selling and selling and selling pressure, which is a lot more powerful than the buying pressure. That at some point, that's gonna run out of power, and we take control of the market. Exactly like it happened over here. Just look at this way. You don't see too much buying pressure. You just see a lot of this red candlesticks pushing down the way the market. The same thing happened over here as well. You don't see too much buying pressure. On top of that, you see many long red candlesticks, right? Right over here, it goes on the same way, right? So always between this trades of buying and selling, you see this parabolic movement down the way. That's what you have to expect. That's what you have to weigh before you're buying in. Because if you're not waiting that parabolic movement, you will buy in too quickly. So therefore, a parabolic movement down the way needs to be weighted before you get into it. It doesn't matter how long it takes. It doesn't matter you have to wait 2 days for that, 3 days for that. You'll do it. It doesn't matter there is a slight increase during the way you're waiting. There might be an increase of 3%, 4% during the time you're waiting for that parabolic movement. It doesn't matter. Just a very, very small comeback from the market, which do not means anything at all on the long term following this strategy. So that's something to consider for you guys. This is the way. You definitely have to look for these parabolic movements down the way, which are kind of running out of power, of the selling power. Then the buying pressure can very easily fight back and take control of the market at that time. That's why we're always having the same movements, no matter what coin we're talking about. When there is a parabolic movement down the way, this is a nice recovery. Then the next one, it might move something like that, but then the parabolic movement comes once again. You're waiting basically those type of parabolic movements. This type of parabolic movement. You're looking to buy after something like this. You don't care of anything else in a downtrend if you would like to use this strategy. You don't care of any other decrease basically. Because you see during this phase, we have this sideways kind of a little bit downtrend with some sort of sideways movement. During these phases, you have some bottoms, which are very small and they're not worth your time for sure. It's very difficult to trade those, and I'm not suggesting. So you better wait for the long parabolic, which comes down the way. It's very powerful and it's without any sort of buying pressure, which is meaningful. It's not meaningful at that time. It cannot be considered. So what we have over here on the right side, we have a couple of calculations basically of these 8 trades that we're having over here with buying, selling, buying, selling, buying, selling, buying, selling, with realistic buying and selling points at price tags where you could have seen signals of the data sheet from the market analysis, right? So this calculation, this example, guys, is realistic from the percentage point of view, as well as buying and selling price tags, right? So for the first trade, 23%. This one right over here, from here till the top, 23%. Then the next one comes in 5%, 24% profit, 9% profit, -3, -4 on these 2 ones, -3, -4%. Then we have +15 and +36, which brings a total of +105% profit in 35 days from here till here. 35 days representing 105% profit, which actually means a lot of money if you consider that you start with $100,000 or $100. It doesn't matter, depends on your budget. Means $23 more, then $123 plus another 5%, then from there another plus 24%, then plus another 9%. So your budget keeps accumulating, which represents your coins at this time. That's your budget. That's what you're increasing. That's what you're gaining. You're not actually gaining huge and loads amount of money by these percentages, but you're gaining your portfolio by these percentages, because the value of your coins are keep decreasing. What you're growing and what you're seeing more is the percentages within the quantity of the coins, and that's what matters, in my opinion, in a downtrending market, in a market which is crashing. Now this thing might happen for 30, 40, 50 days. That's why it's very good to take advantage of this and be able to trade during this period of time in order to accumulate more and more coins. That's the idea. Now let's just look forward what happened. You were able, let's say that you started with 1,000 coins of Ethereum as an example, and you were able to accumulate to reach to a point having 2,300 coins after a type of a trading like this, following this type of technique, which obviously needs to be developed, needs to be trained, and needs to be known how to use it. So that means, look at the mark, look what happened afterwards. Look what happened afterwards. So at this point, basically, where you sold, you had 2,300 Ethereums after starting with 1,000 Ethereums on this technique during this market crash. Think about the enormous amounts of money you were having when the market was approaching this point. Enormous amounts of money you were able to accumulate during a downtrending market. Always a downtrend pays off in the recovery phase. That's something to continue, because the quantity of coins you were gaining will show as real value when the recovery phase is going to take place. So that's kind of all about this strategy, guys. The most important factor you have to keep in mind over here, the most important fact you have to keep in mind actually, is the parabolic movement down the way, which afterwards comes the slight recovery of the market. That's what you have to wait after. It doesn't matter between these movements you have slight increases or decreases. Those are not meaningful and you should not pay attention. Now I'm definitely suggesting you to try this strategy with smaller amounts of money in order to see how you're able to manage a situation like that. It's not a professional way to do it with your entire portfolio or to do it with your entire budget, as long as It's not a problem risking it like that, which represents high risk and probably having high chances of doing it wrong and losing it for the first time. You always have to train yourself in order to be able to do things efficiently in life, and obviously got to learn these things before, and you need to be able to learn the candlestick and to read the market analysis and the language of it in order to do this strategy, right? So that's kind of all about it, guys. Feel free to share your comments in the description area if you have learned something out of this video. I know it's nothing new buying in the lows and selling in the high. That's nothing new. But I've tried during a market crash, I've tried to show you how you can double, triple the quantity of the coins you're having, which will worth a lot more money during the uptrend, which is going to come after the downtrend, right? So definitely that's something to consider. Feel free to share your opinions in the comments area. Like, dislike, and share this video as you appreciate it and as you think about it. Thank you so much for watching, guys, and feel free to check the first link in the description area, which drives you to a page of my private coaching program, my Royal Coaching Program, where I'm teaching people how to build a cryptocurrency business one-on-one with me. I can be your mentor on teaching you how to do this, the entire business from A to Z, which represents a lot. Now, you got a link right there, first link in the description area. Thank you so much for watching, guys. Feel free to subscribe, and I see you next time.